All right, Candlemaster Theory Trader back with you with another video on the weekend review. These are daily 3x3 setups. If you don't know what I mean when I say 3x3, the link is in the description, but let's not waste time and get right into it. So first trade we're going to look at is off of, it's Monday. Of course, I kept these in chronological order. So the weekly range did open and we were trading off of Thursday's range. Thursday was the range candle. This was Friday, which was the money candle here, which makes the low, the primary low that we're trading off of. So Monday did start. Monday was here. So you're really trying to look for Monday's open. I'm sorry, not Monday's open, but the low of Monday. Really, you're looking for a continuation off of this low, off of Friday's low. And the thing is that while we like for price to be, sometimes you draw a fib on the money candle. Price may not always get to the 50% level of the money candle, just depends. So another safe entry is around the range bottom as well. Getting in around that price level can be good. But let's take a look at our entry. So, pardon me. On Monday at between 11:10 and 12:10 a.m. Eastern Standard Time is I'm sorry, 11:10 a.m. 12:10 p.m. I apologize. Okay, was a good entry time frame where the money candle was created here on the 5-minute chart and closed this red candle here, which is the money candle. Price closed below it here. You could have got in on this retrace as well and got in there. Second chance, possibly a little bit around the entry or around the range bottom too, but the risk to reward might not have been as large. But obviously, this was the entry and this was the result right here. So entry right here on this wick. And remember, a good confirmation is that when the daily candle closes, your entry should be on the wick. And then the expansion to the upside came on Tuesday. You could have held through, what is that, Thursday to hit the range top, but I like taking the meat of the move. Tuesday would have been more than enough. So Monday's price action and then Tuesday's expansion. That's fine. So the next one was CAD Swiss, where once again we were trading off of Thursday's range here. This created the range candle. Money candle was here. This one does actually have the fib on there. So, just draw the fib from the high to the low of the money candle. This red candle here was Monday's candle. And pardon me, the expansion did come to the upside on Tuesday, but Monday you could have been good to get in low. So let's take a look at that. Oh, I'm sorry, Tuesday. No, was this a Tuesday entry? I apologize. Yeah, so Monday, either one would have been fine. Monday's low would have been fine. Tuesday, you took off of the range low. I did that one instead. So the entry was between 3:30 and 4:30 a.m. Eastern Standard Time during London session. Right here, you see the 50% of the fibs, this purple line, but price did not get quite there. But anywhere, if you're taking these continuation trades, if you can't get 50% of the money candle, try to take trades around the range bottom and you're expecting straight rise to profit. So that was that. But that was between 3:30 and 4:30. So you're not at the chart 24/7. I say London open is a good time to start. Let's see. So we have euro dollar for a long example. This trade was on Wednesday or Thursday. You had those options. So we're trading off of Tuesday's range. And remember the 3x3, you got 1, 2, 3 to the low. The indicator does fire. If you don't know what I'm talking about when I say the indicator, the link's in the description for that. But this was the money candle. This one as well, you could have drawn a fib to try to get in around the middle of the money candle. I think that did retrace towards that. So you could have got in on Wednesday, money candle, or Thursday. And Friday would have been your payout. There was news on Friday, so that pretty much gave the spike to the upside. But this was the Wednesday entry between 8:50 and 9:25 a.m. The money candle being this small red candle there, close above it very strong, some consolidation right here, and then price just spiked to the upside, so that was good. You also had a second chance to get in around here. Like I said, the range bottom, that's another good level to take entries at, and the stop loss can just go like below these pins to the low right there as well. Try to keep it tight. And then Thursday gave another chance to get in right here where the money candle was created, closed above it, did quite a bit of consolidating after that. So between almost, you had an hour to get into this trade because notice the low of the day held. Okay, that's the main non-negotiable is the low of the day. The money candle's low, which does create the low of the day, has to hold for a trade to be considered valid. So all of this consolidation give you plenty of time to get in to take a long position to anticipate price go to the upside. There was a slight second chance on this retrace towards the range bottom. But at that point, with this swing low, see the low, lower low, higher low here. Could have got in right there. I'm not sure what time that is, but after that, price just took off. So That was it. And then I think this is the last one, Euro New Zealand, I'm sorry. Trading off of Tuesday's range. Wednesday gave the money candle. This did pay out 1 to 5. This Wednesday was pretty much a self-contained trade where you could have got about 1 to 5. 1 to 5 is really like a good thing to shoot for. 1 to 3 to 1 to 5, anywhere in there. Because as you can see, price hit nowhere near the top of the range. It pretty much consolidated the rest of the week. But there was still a decent payout if you took your trade on Wednesday and just took what you got that day for 1 to 5. So this was the trade right here. And sometimes you can use the swing low as a zone of interest. So right here, you see the swing low off the low of the day, the low, lower low, higher low, right in there. Price did retrace into this level a couple times. So you could have got in from 6:30 to 6:45 or between 8:30 and 8:30 and 9 a.m. Gave plenty of time to get in anywhere with this price being in the zone of the swing low pattern here off the low of the day. Gave plenty of time to retrace. But again, if his price is outside of this box, I wouldn't necessarily recommend trading. The only other chance you would have got for a little bit of a lower risk to reward would have been right here at the range bottom. So price broke inside the range, retraced, and this was a good chance to re-enter right here, but your risk to reward would not have been as high. But you still could have made money. So I wanted to include the R multiples as well, just to show profit potentials here. So just on a few of the pairs. So when we get a 1 to 4, that's just, you make 4 times your risk. So I teach pyramiding, whereby say you want to risk, we'll just say $40 on a trade, give or take. Okay. You start out by dividing that into 4 equal portions. So you don't go in with risking 40 one time. You risk $10 at a time. And as the trade goes into favor, you add to the trade. So I'll just show this on Dollar Swiss just so it can make sense to you. When we go back to that one, this one, yeah, okay, right here. So let's say you enter here, right, on your first entry, and then you only enter when price shows profit, or really on green candles. You buy strength, but you sell weakness. So this would have been your first entry. When price retrace, you don't average down. You don't add here. I wouldn't have done the next addition until this close right here, this green candle here. You could have added again with this green close here. That would have been 3 entries. 1, 2, 3, and then possibly a 4th right here, ideally below the daily open. Price did retrace some, but this first entry typically stays in profit. Price may touch it, but you still have your 4 entries on, and then price, you just expect price to go right on up to the upside, which it did right here. All the entries would have been, caked up around here. Again, a slight retrace, but price did expand to the upside, and it would give you maximum return. Because when you're right, you want to be right big. When you're wrong, you want to be wrong small. So if we go back to our multiples here, if you took 4 entries, you could have got anywhere from 140 to 160. And then same ideas for CAD Swiss, which paid out 5R, and Euro New Zealand. IBIT just means same as above. These played out 5R. So using the quarter theory, if you did $10.40 risk, you could have risked 40 to get 140 to 160 or 180 to 200. On this $50 risk per entry, you could have got anywhere from $750 to $800 or $900 to $1,000. Okay, but obviously this is with a larger account size. This is just to show you the earning potential, because you're taking the same types of trades. The only thing that's going to change is your account balance over time and how much you're risking per trade. But again, I'm a fan of the quarters theory. Take a look at that video if you want. It's on this channel as well, The Secret to Big Profits. Take a look at that. But I appreciate your time and attention. That's a few pairs for the weekend review. Definitely check out the links in the description for more videos and training. Don't forget to like, subscribe, and have a great rest of your day.